Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Symphony Holdings Limited annual report. Symphony Holdings Limited is a diversified investment holding company that operates through various segments. The company's business portfolio includes the distribution of Japanese wine, sourcing and trading of healthcare products, and development of SKINS trademarks. In addition to these activities, Symphony Holdings also manages outlet malls and fashion stores, providing securities brokerage services, margin financing, underwriting, and placing financial consulting and money lending services. The company offers information technology, corporate and portfolio management services, as well as accountancy, legal, secretarial, and cruiser services. The company's retail business involves trading, retailing, and distribution of swimming apparel and accessories, property investment, holding of club debentures, sublicensing of trademark rights, manufacturing and sales of alcoholic beverages and food, and trading and wholesaling of sportswear. Furthermore, Symphony Holdings provides asset management and investment advisory services, operates park outlets, and owns the sports brand Skins. Overall, Symphony Holdings Limited is a multifaceted company with a wide range of businesses and services that cater to various industries and markets. Symphony Holdings Limited maintains a market capitalization of $4 billion, broadly in line with the industry peer group. Symphony Holdings Limited trades at a higher price-to-book ratio of 1.75 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 47% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes, such as buybacks or dividends, rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified from the extracted summary. On the growth side, commission income from concessionaire sales, sales of goods, royalty income, rental income, interest income, and strong sales momentum in certain locations such as Xiamen and Shenyang are key contributors. Additionally, the introduction of international brands, an integrated online and offline business model, and a reduction in finance costs have also driven revenue growth. On the decline side, branding segment decrease in revenue by approximately 3.6% is a notable factor. Furthermore, the performance of compression sportswear brand, SKINS, fell short of expectations due to intensified market competition and cost pressure. These factors highlight the importance of adapting to changing market conditions and maintaining a competitive edge in order to sustain revenue growth or mitigate decline. The net income of the company experienced a significant decline, decreasing by approximately HK 100 and 10.2 million from HK 100 and 43.1 million to HK 32.9 million. This represents a staggering 77% drop in net income. However, it's worth noting that the financial services segment saw an improvement, with its reportable segment loss decreasing from HK 26.1 million to HK 38.7 million. On the other hand, the company's profit margins showed some positive changes. The gross profit margin increased by 1.1%, rising from 91.4% to 92.5%. This increase was largely driven by the branding segment, which saw its gross profit margin rise by 4.2% from 50.3% to 54.5%. The retailing and financial services segments maintained their respective profit margins of 100%, indicating stability in these areas. The reasons behind these changes are not explicitly stated, but it can be inferred that the company's efforts to improve its profitability have had some positive effects on certain segments. However, the significant decline in net income suggests that there may still be underlying issues that need to be addressed. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. With an operating cash flow of HK 171.7 million, the company has successfully transitioned into a positive cash-generating phase. This achievement is a testament to the company's effective management and operational efficiency, allowing it to convert profits into actual cash inflows. As a result, the company is now better equipped to invest in growth initiatives, pay off debts, or return value to shareholders through dividends. The company's debt level and interest expenses have undergone significant changes. In terms of debt level, current bank borrowings have increased substantially from not provided to HKD 734,824,000. Additionally, total reportable segment liabilities have risen by 17.7% from HKD 537,554 to HKD 632,374. However, consolidated total liabilities have only increased marginally by 2.97% from HKD 12,097,000 to HKD 12,159,225. On the other hand, interest expenses have decreased significantly. Interest expenses on bank borrowings have dropped from HKD 79,266 in 2024 to HKD 49,871 in 2025, while total interest expenses have also decreased from HKD 94,188 in 2024 to HKD 64,300 in 2025. The decrease in weighted average effective interest rate is cited as a possible reason for the decline in interest expenses. Overall, these changes suggest that the company's financial situation has become more manageable, with lower debt levels and reduced interest expenses. The performance of various segments and regions within the company can be analyzed based on the extracted summaries. The retailing segment demonstrated strong performance, as indicated in page 1. Similarly, the financial services segment showed positive results, with relevant information found on page 9. In contrast, the branding segment struggled, with evidence of poor performance presented on pages 9 and 10. Although the interfinancial segment's revenue was reported to be HKD 307,561, page 10, its overall performance is unclear. Management is expressing a positive outlook for the company's future. The acquisition of SYMPHONY Group is expected to provide full control and flexibility, allowing for more effective management and growth opportunities. A key strategy is to revitalize the SKINS brand through product development and innovation, which will drive business expansion. The company's prospects are also buoyed by recent improvements in turnover, operating costs, and profitability. Management plans to capitalize on these gains by upgrading consumption trends, introducing luxury brands, and innovating marketing models. This strategic approach is expected to further boost the company's growth trajectory. There are no notable acquisitions or divestitures to report. The company has not engaged in any significant transactions involving the purchase or sale of assets or businesses during this period. This lack of activity suggests a focus on internal growth and development, rather than external expansion through mergers and acquisitions. As a result, the company's financials and operations remain unchanged, with no new investments or divestitures to account for. That concludes the financial summary for Symphony Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.